Good afternoon, everyone. Traders are still coming into the room. We're going to be starting promptly at 4 o'clock. So we have about a minute and a half. Hey, good afternoon, everyone. This is Mark from Right Line Trading, and I really appreciate you giving me your time this afternoon. I think I'm going to be introducing you to a very, very unique trading system. You're going to find it different than anything that you've seen before, and I think you're going to find it to be extremely powerful. Now, the first thing I want to do, I'm going to actually take the slides down for a second, because while I show them, I want to have my trader open. So let me put the slides back while the actual program is booting. Okay, there we go. So we're at www.rightlinetrading.com. We're at info@rightlinetrading.com. And our phone number 786-713-5276. And now a quick disclaimer that all signals and trading opportunities provided both orally, writtenly, or electronically are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within our futures or forex trading rooms, or for any profits or losses that may be incurred. We all know that there's a substantial risk in trading, and that you can lose a significant amount of money. Careful consideration of your financial position should be made prior to trading. Never miss more than 2% of your account in any given trade. We are not licensed, certified. We're not licensed commodity trading advisors, and really, you should consult your a financial advisor before making any investment decisions. And with that said, let's move forward. A little bit about myself. I'm a graduate of the University of Pennsylvania. I'm a former professor at Jefferson College in Philadelphia. I've published close to 15 peer-reviewed articles in first-tier journals. And I've been involved in the financial markets for over 20 years. Now, Right Line Trading is the product of over a decade of analysis of price action, market structure, and indicator algorithms. And the software is based on mathematical modeling of closed systems utilizing multivariable equations. In my undergraduate work, I was involved for a significant period of time in mathematical modeling. And at that time, way back when I was a kid and I was in college and graduate school, I was involved. I worked with the U.S. Navy using a program called ASOP, which was Automated Engineering and Scientific Optimization Program, to optimize underwater decompression schedules. Back then, it was a very dangerous task for the U.S. Navy to make very deep dives. The move back up requires that you switch different oxygen mixtures, and that you take periodic rests as you move from way deep down. We're talking over 1,000 feet to move up. If you don't do it exactly right, you wind up getting the bends, and you have to go into a decompression chamber, and you can also die. And the way it was done back then was just by trial and error. And myself, along with my associates at Penn, optimized these underwater decompression schedules using mathematical modeling. And mathematical modeling can be applied to any closed system. And every single financial market is nothing more than a closed system. It behaves just like each one of them behave the same, and certain forces come to bear on price that determine exactly how they're going to move out into the future. The process of optimization is determining what those forces are, being able to quantify them, and put them into a multivariable equation to optimize them, and then to create the software in order to allow it to do its work. And we are one of the fastest growing trading systems on NinjaTrader. I hope that explanation wasn't too confusing, but as we go on, I think you'll see more and more of what I'm talking about. Now here's the software coming up in the background, and I'm just going to drop it. Let me just drop this. Okay. Now, our Uni-Renko trading system is really unlike any trading system I think that you'll have seen in the past. It's going to give you precise, exact, software-generated entries that work, and it is used by many funded top-step traders. Just excuse me for 1 second. I'll be right back. Okay, I'm sorry. Now, the system was created via the use of mathematical modeling techniques. And as I mentioned, the science that we utilize creates software whose purpose is to predict the future movement of price on any financial market and on any time frame. And this is the same principles that a lot of the large software companies use to build their own software. Now, you can use it on the futures market, Forex, or stocks. Now, what makes it unique is that all the indicators have forward-looking ability. We all have seen, for probably the whole time we've been trading, for me, it's been 15 years, all the indicators that tell you what price was doing, but don't have any forward-looking ability to tell you where price is going to go. Those indicators we've discarded. The indicators that we've created lead price. They do not lag price. And in order to achieve that, you're going to see that what we have done, it's something very unique. So the software is purposed to predict the future movement of price. We don't care where price has been. We only care where price is going to move out into the future. We can predict that with a high degree of precision. We're going to make money. Now, the type of bar that you trade is really up to you. The software will work on any kind of bar. A candlestick, point and figure. But let's take a look at this candlestick, and this is a range. And for a long time, I traded range bars. And range bars have a lot of positives to them. One of the big positives is there's only one independent variable that determines when a new range bar is created, and that is how much movement there is in the market. If it's a 10 range, you're going to create a new bar every 10 ticks, every 10 pips, every 10 cents. There's no additional independent component of time or ticks if you're trading a tick bar. There's only one single independent variable. And that's the way we want are the way we display price to be. We don't want it to have two independent variables operating at the same time, say time and the amount that price moves. At least for me, to delineate price and market structure, I only want to see what traders are telling me, and I don't want that information to be cut off via a second independent variable. So I traded tick charts for a long time. And then I moved to Uni-Renko. Now, Uni-Renko really creates a smooth pattern, and it really gets you into trades and keeps you into trades. But the problem is it obliterates price action, which is really a problem. And we're going to talk about that, because every time you make a change, there are trade-offs. There are pluses and minuses. You're not going to be able to carry over all the pluses without pulling across a few minuses. Now, the weaknesses of Uni-Renko is that they do obliterate price action. I mean, from candle to candle, they do not tell you, you can't look and determine who's in control of the market, the bulls or the bears, in the sense that you can't use Japanese candlestick patterns. And I think that Japanese candlestick patterns had value, but I think as time progresses, the value of Japanese candlestick patterns is falling away. I mean, I always like to look and determine when there was an engulfing candle, a dark cloud cover, a piercing candle, a doji. These were important to me. I also cannot discern, when I use Uni-Renko, a rising and falling triangle, a bull flag, or a bear flag pattern. These are patterns I think that do have power. Now, here's the reason why Japanese candlestick patterns and some of these longer term patterns, like rising and falling triangles, the longer term patterns still have more power. But if you're going to day trade and you're looking at candle to candle to candle, the reason that Japanese candlestick patterns have much less power than they did is that when the Japanese invented them, and I think they invented them about 400 to 500 years ago, the power of each individual trader was equal. So that if you had trader A and trader B, and trader A was trying to move the market up, and trader B was trying to move the market down, the assumption was made that trader A and trader B were equal in power. The problem that's happened in the last couple of years are the big institutions, the algorithmic trading, and the computer-generated trading. What they do is they just completely destroy the value of Japanese candlestick patterns. In addition, there are big commercial traders. There are small traders like us who will throw in a 25 lot or a 50 lot. And what they feel, whether they're bullish or they're bearish, is going to have a lot of power in determining the direction of the market, especially if you trade a more thinly market like the DAX, which we trade every day, and even the NASDAQ to some extent. So on a candle per candle basis, trader A and trader B can no longer it's no longer an axiom that they are equal in power in determining where price is going to move out into the future. Therefore, engulfing candles, dark cloud cover, piercing candles, they now carry less clout and they have less throw weight. So they don't mean as much anymore. So it was easier to shift to Uni-Renko bars because we're giving up something that has a lot less power than it used to have. Now, the strength of Uni-Renko is that they filter out a tremendous amount of noise. And there is a lot of noise if you trade time, tick, or range. But what you need in order to profitably trade Uni-Renko is you need these leading indicators. Because anytime I do a webinar and I ask traders, now I don't have the chat room open, but please ask questions as they come up, because at the end I will answer them all. Is that the goal of a day trader is not to get winners, believe it or not. You can get 9 or 10 winners in a day and still wind up losing your bank account and going broke. The goal of a day trader is to avoid losers. If you avoid losers, you're going to trade with amazing profitability. Now, the sensitivity with which you trade with is your ability to grab winners. The specificity with which you trade with is your ability to avoid losers. So obviously you want to trade with a tremendous amount of specificity. You want to wait till everything you have is in alignment and then take the trade, even if it means you have to let some winners go. And you know, FOMO, which is FOMO, fear of missing out, is a tremendous psychological problem that a lot of traders have. They want to be in on every single winning trade. If you try to do that, you're going to pull in a ton of losers. If you sit and are diligent and have a lot of patience, you're going to only trade at the optimal time, and that's trading with specificity. That's our goal. That's the goal of our system, is to trade with a tremendous amount of specificity, so that even when we're trading Uni-Renko bars, when they go into chop, we can stand aside and not get caught up in it and avoid taking losers. Now, part of that is depending on what you trade and what your goals are. If you want to day trade or swing trade, if you want to trade the Forex markets or the futures markets, or you want to trade stocks, we have optimized the inputs for each individual Uni-Renko setting. So it's not going to be the same if you trade the NASDAQ, or if you trade crude, or if you trade Google, or if you trade Amazon, or if you trade a small cap stock. Each one is optimized. Now, let me give you an example of 2 full system trades. And it's going to be a little bit of an eyeful, but over the course of this webinar, although it's going to take a little bit of screen time, the learning curve is quick, you're going to really quickly see how easy it is to take a winning trade. And here's a long trade. It's an oscillator signal, candles outlined in blue. You have dual dot confirmation. You have 2 green lines below, and up you go. And I'm going to explain what all of these things mean, and then we're going to go to some live charts, so you can see how anyone can show you JPEGs. But I think, you know, sort of the pedal hits the metal when we look at live charts. This gold line is the VWAP. That's the volume weighted average price. This is a 50-period moving average. These are pivots. I'm going to show you the whole system. It's another trade. Now, anyone, again, can show you these big trades. They look the same, but they're different. This goes 15 3/4 points. This one goes 131 ticks. You're going to get trades like this. But all that you really care about is that with an incredible degree of precision, you're going to at least hit your first target. Your stop's going to move to break even, and you're going to lock in profit. And you're going to do that with at least 75 to 80% of your trades. If you happen to grab a runner, it's icing on the cake, and you're going to get the runners. The key, though, is to get that first target, get it out, lock in your profit, reduce your risk to 0, and then you're in the trade and you can relax. And just hope that the market will take out all your targets and give you a huge winner. Now, the first I'm going to discuss is our 3-line indicator. It assesses momentum, stochastic, and order flow. Now, why does our assessment have forward-looking ability? When, if you look at momentum on your trading chart, stochastic, even order flow on your trading chart, they're not going to tell you where price is going to move out into the future. I'll show you how we do the assessment And the first one I'm going to show you is order flow. Now, order flow is a very, very tricky assessment, and you're going to see why. Order flow tracking is also very tricky. And if you do it, unfortunately, the way most people tell you to do, it's not going to work for you. I'm going to show you why also. Now, here's the market delta. Now, this candle, I'm sorry, this is a little blurred, but this shows you a green 2,985. This means that on your dome, there's a marked overabundance of buyers versus sellers. It doesn't tell you, it's not looking at executed trades. In terms of market depth, there's a significantly greater number of buyers on the dome. That's all you can tell from looking at order flow, is where the buyers are sitting and where the sellers are sitting, but it's not going to tell you where the trades are executing. That's a completely different type of metric and not displayed here. Now, this is the sum of the bid-ask difference of all the ticks or pips or cents of the candle. So this is going to tell you that there's significant buying pressure and the candle is going to close up. Now, here's the problem. This is a positive 222 and the candle closes down. Now, remember, I told you this is not looking at executed trades. It's just looking at the depth of buyers and the depth of sellers. So sometimes you can have a positive delta on a candle and the candle's going to close down. So if that's the case, how can it have any predictive value in telling you where price is going to move out into the future? And that is the issue. And that is why standard order flow tracking does not work. Now, here's a chart, of just a bunch of candles. And you can see each one of them has a delta. Now, the majority of deltas are going to accurately predict the direction of the candle close. Most up candles have a positive delta, and most down candles have a negative delta. Now, if you make this assessment off your trading chart, you're going to know nothing about where price is going to move off the right edge. And if you assess the delta this way, simply in the absolute value of the delta, you're going to learn nothing. In fact, it's going to confuse you more than it's going to help you. So here's what we determined: that one standard deviation's worth of delta values close in the appropriate direction, which makes sense. The data is normally distributed, and what you need to do is filter out the outliers. And if you can do that, then the delta becomes a relevant independent variable in telling you the direction that price is going to move out into the future. Now, here's how we do it. We don't look at the delta of our trading chart. In fact, we never look at anything on our trading chart because price, there's only 4 variables. Actually, there's only 5 variables on a chart that you can use. There's the high of a candle, a low of a candle, the open, the close, and then there's volume. And those 5 variables, that's it. The volume obviously can be tailored in a much more complex way by looking at order flow. But if you take that off of your chart, it's not going to tell your trading chart. It's not going to tell you where price is going to move out into the future. So what we do is we take it off of the 2 higher multiple Uni-Renko charts. So if you're trading a 2 Uni-Renko, we're going to take it off the 4 and the 6 Uni-Renko charts. If you're trading a 3-minute, we're going to take it off the 9-minute, and we're going to take it off the 27-minute. And we're going to completely ignore anything that's happening on your trading chart. These higher time frames are going to determine where price on your trading chart is going to move. And we look at the delta of each candle on those 2 higher multiple Uni-Renko charts or higher time frames. Now, in order to filter out the outliers, we put those delta values into a 15-period simple moving average. Now, if we put it into a 50, it's too slow. And if we put it into a shorter moving average, it's too fast. That 15 period is the perfect size or length that we want, or period, in order to filter out the outliers, but still give us an accurate assessment of who's in control of the market. Now, when both 15 period simple moving averages are sloping up, both assessing these two higher time frames, then the order flow line on your chart is going to go green. And you're going to know that the bulls are firmly in control of the market. When both 15 period simple moving averages are sloping down, the bears are firmly in control of the market, and it's going to be a lot of selling pressure. When the two 15 period SMAs are not in agreement, that assessment on the three line is going to be yellow, and you're going to know that the market's more likely to chop than to trend. So let's take a look at these JPEGs. I took them right off the charts, and we are going to go to the live charts in a minute. And once order flow turns green, you've got to trade long, because this is telling you those two 15 period SMAs on the two higher Uni-Renkos are sloping up. And here they're both sloping down. So that price on your trading chart is going to rise. Now, the important thing is that on almost all software, this line's going to go green because price rises. Here, price rises because this line is green. This line is not even looking at price on the trading chart. It's looking at price on the two higher Uni-Renko time frame charts only. Now, if you're getting stopped out consistently, if you're not getting to your first target, it's likely one of the problems is that you're not trading in the direction of order flow. When there's buying pressure, you can only trade long. You can't be caught in this counter trend candle. You can't even be caught in this counter trend move. You can only trade long. And when order flow is red, you can only trade short. If you don't, you really are going to have trouble. Now, here's another example. Now, price comes down, and you see how the indicator leads price. It's going to turn green before price moves up. And on the first up pivot with a green order flow line, you're going to go long. And you can stay long as this line is green. Never get caught in a counter trend move on a green order flow line, or you're going to get stopped out. In fact, we like it when other small commercial traders take these counter trend candles, because if we're in the trade and price continues to move up, which it almost always does, they're going to get stopped out. And as they get stopped out, they're going to have to buy their contracts back, and they're going to help push that market long. So they're going to give further strength to the long move. And here's just one more example. Got to go long, and you see order flow lines green first. Price comes up. Here's the pivot, and up you go. Here you've got mostly yellow. Don't trade. Here's red. Only down. Here's green. Only long. And here's chop. This is what we have to avoid. Now, when we add line after line after line, you're going to see how easy it becomes to avoid chop. When the line turns green, order flow is creating significant buying pressure. We're going to trade long. Now we're going to add momentum. Now, momentum utilizes the slope of the MACD. But it's actually a much more elegant assessment than I'm going to tell you. I'm going to keep it simple, and I'm going to let the indicator do its work, and I'll show you. What we look at is whether or not the MACD line is accelerating away from the signal line. If it is, momentum's positive. If the MACD line is accelerating towards the signal line, then momentum is negative. Now, you also have a MACD crossover, which the indicator assesses. So there are times when that first line, which is the momentum line, is going to be yellow but you're going to see how the 3 line is still going to call for you to take a long. And what we do is the same thing. Now this shouldn't be momentum line, it should be MACD line. We look at the slope of the MACD line on the 2 higher multiple Uni-Renko charts. We're splitting all the assessments we do into multi-time frame assessments, and we are completely removing the momentum assessment, which is created from price on our trading chart, because all that's going to do is confound the assessment. We don't care what price is doing on our trading chart. We only care what the 2 higher time frames are doing, because they're going to lead price on our trading chart. So that when both MACD lines are accelerating away from the signal line on the higher term time frames, that momentum line is going to be green. And when both MACD lines are accelerating towards the signal line, that line is going to be red. And when the momentum lines are not in agreement, they're going to be yellow, and you're not going to trade, because this force is not in alignment on the 2 higher multiple time frames. And when those 2 higher multiple time frames are not telling you the same thing, price on your trading chart doesn't have any predictable direction. So now we're going to add them together. Now the first line is momentum and the second line is order flow. So now we need 2 lines to be red. We're trading with more and more specificity and less sensitivity. So now, in order for us to take a short pivot right here, we have to have dual reds. In order for us to take a long pivot right here, we have to have dual greens. And if we don't, we can't trade. So we're trading in the direction of multi-time frame momentum, the assessment of multi-time frame order flow, telling us whether there's bullish pressure or bearish pressure in the market. And together, these are independent forces that are moving price, that tell us where price is going to move out into the future. These don't lag, they lead price, which is why price almost always rises when the line turns green. Because price isn't driving these lines are driving price. So now we're going to go, here's another example. Now it's tougher to get dual greens and dual reds, and we only care at a pivot when we have to make a decision as to whether or not we're going to take the pivot short or long. We don't trade in the middle of a move. We trade right here on the short pivot, and we've got red. And we trade right here on this long pivot when we've got green. Here's a short pivot, not quite red, but here's dual greens for a long pivot. If we don't have that, we can't trade. Now, I'm only giving you a direction. I'm going to show you later on where we generate our entries. There's another trade. Again, we don't care about the length of the trade in its entirety, but if order flow and momentum stay green or stay red, the trade is not going to stop. And remember, a lot of traders are looking to fade the market on oscillator divergence and MACD divergence. They're trading some kind of other system. If they do, all these traders always lose money. Traders have been using MACD divergence and oscillator divergence for 15 years, and they've all gone bankrupt. It's time those kinds of concepts are put aside, because until order flow and momentum change direction, divergence is just going to walk you right into a stop out. And here's a better way to define chop. No dual green, no dual red on a pivot entry, and there's a short. No long, you look for the roll and the short. You always know what you're looking for and the direction you want to trade. It's just a question of whether or not you're going to get an optimal entry. Now, stochastic also is a little more elegant because we look at oscillator divergence. But for the most part, here's how the assessment is done And here's what you're going to look for. And you're going to see later on in a few more slides how all of this comes together. And we make it really easy to read this. Again, we never look at our trading chart. We don't care what's going on there. We only look at the 2 higher time frames because they're going to lead price. Now, when the stochastic is above 80, we've decided that that means that the bulls are in control of the market. They've pushed that oscillator up. And if you understand the oscillator equation, you know that bulls are firmly in control. We are not looking for oscillator divergence or stochastic divergence. We're looking to trade in the direction the bulls are the market's telling us to trade. So you're always going to get green lines if both of those stochastic lines are above 80. We don't care if they're above or below the signal line. If they're above 80, they're green. If they're below 20, they're red. And we're only going to look to go short. Between 20 and 80, we have to look at what the indicator does. It looks at whether the stochastic line is above the signal line. If it is on both higher time frames, the line is green. If both stochastic lines are below the signal line, the line's red. If they're not in agreement, the line is yellow. So now we've got 3 lines. Now the 3 lines can be hard to assess because they're all changing color intra-candle, and it may be a little bit difficult to make the assessment. Remember, coded into the stochastic line is stochastic divergence, and coded into this MACD line is not just MACD momentum, but the MACD crossover. So we make it really, really simple to do the assessment. And here's how we do it. We project the ultimate results right onto the candles. And you don't even have to look at the 3 line. So I'm going to go to the next example. Look at the candle halo. When the candle halo is yellow, the 3 line is aligned to the downside. When the candle halo is blue, the 3 line is aligned to the upside. Now, when the candle halo is black, it means it's not aligned at all, or in the middle of a move, what you have is stochastic divergence. Now, if you have stochastic divergence in the middle of a move, it almost always gets run over, so we don't care about it. All we care about is the color on our entry candle, and we don't even have to look at the 3 line to tell us the direction to trade. Now, you can determine the thickness and the color of the down candle, or the down halo, and the thickness and color of the up halo. Those are all programmable and easily modified. I like gold on a down and sky blue on a long. And you can see you get this down 3 line on an up candle. Now that is usually the sign that the market's going to turn. And when it does turn, and you've got the down candle with the 3 line aligned to the downside, you have your trade. Same here. 3 lines aligned to the downside, and down you go. But you see the candle before it is outlined in yellow, which tells you this long move is over and likely to roll, and you're going to be in on that short roll. Here, the counter trend candle is outlined in yellow, so you're never going to chase this market long. You're just going to take the pivot back to the downside. Now we can do one more thing, and I elect to do this. Some traders do not do it. And that is, since all the information that you need is projected onto the candle halo, and you don't want to see any more data than you need to, because you want to focus on price, I make the 3 line indicator invisible. And all I have to look at is the candle halo. I put the way we format it is we put it in the same space as price. It's gone. And all I care about is my candle halo on entry, entry, and entry. Now, I never counter trend trade, so I wouldn't take this short trade. But if you're going to give it a shot, you're only hope of taking a counter trend trade is if order flow, stochastic, and momentum have turned. If you don't allow that to happen, you're going to have trouble. Even then, I think counter trend trades are way too dangerous. If you stay with bread and butter trend trades, you're going to make really good money. And here's the same example. Here's another example. Entry, 3 line to the downside. Now you can enter here. I wouldn't have done it. It's a counter trend. Now you want to take the short trade, but you can't take it because the candle halo is black. And this is with trading with specificity. You know this is a high risk entry. And even though it works, you don't care. Here's a long trade, no 3 line. It goes a few ticks. This is a 2 Uni-Renko. It goes 2, 4, 6, 7 ticks, but it's a high risk entry. You take your 2 low risk, high reward entries, short and short. And those are the 2 big winners. And it's not an accident. When you take low risk trades and and these are high reward trades, potentially high reward. Now, the oscillator, we have an exponential oscillator, which really helps you get an entry. It's not absolutely required for an entry, but it really helps, and it does decrease risk. Now, I just want to say that you should never use anything that's calculated on an exponential. That's always been my trading rule for 15 years. And the reason is that price is an arithmetric movement. It's not geometric movement. I mean, this doesn't go up like a parabola does. It goes up in a straight line. And even as momentum increases, the speed of the move may increase, but the price doesn't move up as like x to the power of 2. So exponential moving averages are a joke. I don't know who decided to create them, but they have no logic and no mathematical meaning in terms of market movement. But this oscillator, which is to the power of 2, speeds up the oscillator line, and it really does create great entries. And so you have to have a little bit of leeway in your dogma. If you're totally inflexible, when you come across something that works, you're never going to be able to adopt. Now, I'm going to show you in a minute how these signals are generated. But here's an oscillator signal long with the 3 line and up. Here's an oscillator signal long with the 3 line and up. Oscillator long with the 3 line and up. Oscillator long with the 3 line and up. Now, I don't counter trend trade. This is a short oscillator signal. I only trade long above the 50, and I'm not taking this trade short. Here's an oscillator signal short. I don't counter trend trade. I don't counter trend trade. In any event, look at the color of the outline. It's blue. You're not going to take a short trade on a blue oscillator halo. Remember I told you that as the market moves down, the halo is going to lead price? Well, there it is. You have an up halo on a down candle. Next signal is long, and up you go. Now, in a while, it's going to become second nature to you. Now, here's another set of trades. Short, oscillator, 3 line, down. I'm not taking the counter trend. Short, down. Oscillator up, I'm not taking it. Taking the oscillator down. Short, there's the oscillator, it fails. Short, it's a winner. Short, it's a winner. You're always trading short below the 50 and long above the 50. Now here's how the signals are generated. Every time the oscillator line crosses the 50, here's the 80 line and here's the 20, here's the 20 line. We don't have the 80 line, but every time it crosses, if it crosses to the upside, you get an up oscillator signal. If it crosses to the downside, you get a down oscillator signal. An up oscillator, down oscillator signal. Now these signals are oversold signals, which I like to remove, but we have 150 traders in our trading room and the majority of them wanted to keep it. I don't like to keep it because I ignore them. I don't care if this oscillator is below the 20. I know that if order flow, stochastic, and momentum are still short, big money is still in the market, because that's the only thing that can align those independent variables on two higher time frames. Otherwise, those two higher time frames are going to move in random fashion. It's only big money, and this is really an important point. Everybody thinks that they can track the flow of institutional money, but you can't do it directly. All you can do is make the supposition, and it's a real good one, that when two higher time frames align, it's only because big money is being placed to work in the market that you're trading. And remember, every closed system, like a financial instrument, by nature wants to move in chop, and that's a law of thermodynamics, unless big money comes in to create this alignment. Anyway, these are oversold when you have the up red triangles, and I just ignore them, looking for a down red and an up blue. Now, we want more specificity. When we trade, we want to make sure we get winners. So what we did was we created a dot system. Now, the dot system is different on every market. So every single market has to be individually optimized. Now, if we're going to take a trade on the E-mini, we also want to trade in the direction, or the multi-time frame direction, of the NASDAQ and the Russell. If you try to take a long trade, now you can get away with it. The NASDAQ is pretty volatile, and there are going to be times when the NASDAQ will make long moves when the E-mini and the Russell are trading short. But if you want to stick to the trades that have a very high likelihood of winning, what we do is we assess the direction on the multi-time frame direction of the NASDAQ, the multi-time frame direction of the Russell, via the two higher multiple Uni-Renkos, and project that onto the E-mini. Now here's the color of the dots. The darker the red, the stronger the trend. The darker the green, the stronger the uptrend. So these dots are telling us that, and this is the E-mini. I just gave this as an example. We have it on crude, we have it on the DAX, we have it on bonds, we have it on notes, but the dots represent different things. On the E-mini, this represents the multi-time frame assessment of the direction of the NASDAQ and the Russell. So now you're not only making an assessment of multiple time frames on the E-mini, you're also leveraging the assessment of the multi-time frame direction of the NASDAQ and the Russell. It's pretty rugged to take a short E-mini trade when the NASDAQ and the Russell are heading up. The likelihood of that being a winner is small. It's not that you can't get away with it. You can. I mean, sometimes there's divergence. And one day this week, we had the Dow trade up, and we had the NASDAQ and the S&P 500 trade down. So these markets can diverge. But in general, this is what happens at least 80% of the time. We want to trade on the same direction as our correlative markets. And here's another example. This is the NASDAQ and the Russell. And you can see the power of the trend. See how the dot is light pink? Then it goes to dark here. This is the intermediate color. Now you would never take these counter trend move because they're sitting on top of red dots. The red dots telling you is that the multi-time frame direction of the Russell and the NASDAQ are still heading down. So if you're gonna venture to take that trade, the likelihood of success is extremely small. But if you take the roll back to the downside and look for further movement down, the likelihood of success is very big. So these dots are extremely important. And as far as I know, this is the first piece of software that ever assesses the direction of other futures markets on the market that you're trading. And here's another example. Here's an oscillator signal long. Now, I don't have the 3 line in here, because in the end, we'll put it all together and I'm going to show you the live charts. This dot is telling you that the NASDAQ and Russell are moving up. I feel real comfortable taking an E-mini trade when I know those markets are with me. When there's a counter trend move, I'm not going to be in it. The dots are green. When I get this next oscillator signal long, I'm in it. Now, what happens when you don't have any dots? It's another reason not to trade, because it means the NASDAQ and the Russell have no alignment in trend. So we're not only are we looking at the multi-timeframe assessment of stochastic, order flow, and momentum, we're looking at the multi-timeframe alignment of the NASDAQ and the Russell. And when there's no dots, we have no alignment, and the E-mini is likely to chop. And again, I want to say, sometimes the E-mini will make a winning move. But if you want to try to get it, you're going to pull in a lot of losers. And what you want to take are your very low risk, potentially very high reward trades. And those are in the direction of the dots. It's just one more example. You go short with the dots. There's no long trade here. And here's the short trade all the way down. No long trade. It will prevent you from making the mistake that all these traders are doing, getting caught in the counter trend direction, and they're going to get stopped out. Now here's an oscillator signal on a green dot. Forget it. Now there's no dots here, so you cannot trade. Here's the oscillator. There's the green dot, and up you go. No dots, stand aside. Now, in order to increase the success of the trade, we now look at the dots on two different speeds, both looking at the two higher time frames. So now the dots look like this. We have a fast moving average assessing the NASDAQ and Russell, and the slow, which are the circles. We still call them the dot system, even though you have X's and dots. So it gives us the ability to get into more trades, because sometimes the NASDAQ and the Russell will turn slower. We've got that fast dot, we're still good to go, and we're in the trade. So when we get a dual dot entry, I mean, that's a really primo entry. And you're going to see this on different markets. Here's the same thing. Down, no counter trend, down. Now this is a counter trend. You can't get in at the pivot, can't get in at the pivot. Here's your entry on your green dot and up. Here's a potential counter trend with a dot. And we don't have the 50 here, so we really can't tell, but I'm just showing you how the dots are going to help confirm the direction of the market, how they look. Here's a long trade. You can't get in on the first candle of the pivot. Sometimes you can enter on the second, and up you go. The short trade, and there's the long trade. Now, let's put the dots and the three line together. Now, when you get a dot entry with the three line, it's a great trade. Here you get the three line long, but you have a red dot sitting on top of the candle. So you can't take it long. You need everything to align. Here you get a short pivot, but you don't have the three line, even though you're sitting on a red dot. So you can't take it short. This is the only low risk, potentially high reward trade on the chart. It's right here. And you're going to let everything else here go. And it doesn't matter. You're not going to cry over this trade, even though it went significant amount, because it had the potential to blow up in your face. And let me tell you, if I had a nickel for all the trades I took without the three line that blew up in my face, I'd have a lot more than $5. So you just can't do it. I'm just going to skip it because it's redundant. And again, it's redundant. Now we have another indicator that actually tracks money flow. Everything else is tracking money flow indirectly. This is also an indirect assessment of money flow, but it's very, very good. And I know it's a lot, but you're going to see that it's very intuitive and very easy to trade. Each market has its own unique money flow indicator, and it's optimized to determine money flow direction on that individual market. Now, we're going to stay with the E-mini because it's the easiest one to define for you. Crude is a little bit tougher. The DAX is a little bit tougher, but the principles are the same. Now, here's what I want you, here's the important thing. The dots are looking at two markets. They're looking at the NASDAQ and the Russell. These three lines are looking at 9 markets, 3 in each line. It's the same type of analysis. It's a correlative markets analysis. With the dots, the NASDAQ and Russell always correlate to a high degree with the direction of the E-mini. And that assessment is right here in the middle. It's on a different time frame, and it's a very, very different type of analysis. You can have dots, but you won't have this line. Now, I can tell you right off the bat that the top line has treasury notes and treasury bonds, along with one other market I can't tell you because it was real hard to figure out. Now, what happens, and the lower line also has 3 markets. In sum total, they have all the index equities, they have treasuries, they have treasury bonds, treasury notes, we have an energy, and we have currencies, and we have precious metals. Now, what happens in the course of a given day? The amount of money in the market is pretty much fixed. What happens is that institutional traders rotate the money from sector to sector based on risk. So when there is an asset class to asset class rotation of money, it's reflected right here. Now, even though the line that reflects treasury notes and treasury bonds is red, what's the direction that treasury bonds or treasury notes take when the E-mini falls? They go up. And we know that. So the way we coded the line is to go red. They're telling us that money is flowing out of the E-mini and into the correlative markets that should go up when the E-mini goes down. So that when you have 3 red lines, you have a terrific trade. But mandatory is you must have this middle line, because that are all the index equities. That is the Dow, the Russell, and the NASDAQ. And it's a multi-time frame analysis. Obviously, you want notes and bonds. Obviously, you also want precious metals and currencies. The more lines you get, the better. But the middle line is key. And that middle line green on a pivot, you can take it long. And this is a really, really good assessment. Now, what we're doing here is we're looking to avoid getting stopped out, and we're looking to avoid taking a trade in chop. We want everything to tell us when there's the potential for chop, and we want to avoid it. Here's that middle line. It's the key line. It's all different color. And look at price. Going crazy. So let's put it all together. Remember one principle that we always adhere to. No indicator does any assessment from any metric that is taken off our trading chart. They all look at other markets, and they all look at multiple time frames, or if they do look at the markets we're trading, like order flow, stochastic, and momentum, it's a multi-time frame assessment of higher time frames. No assessment is made off of anything that occurs on our trading chart. If that is done, it creates a dependent variable, and a dependent variable will keep you out of winners and walk you into losers. And here's like, when you get trades like this, you want to salivate. There's your oscillator. There's that middle line that's key. And you have a short trade. You'll also have the short roll. You have, now, I didn't talk about overbought, oversold, and I'm going to talk about that on a live chart. But you've got this move all the way down. Depending upon your automatic trade management strategy, you can stay in this trade for 85 ticks. Again, the distance is irrelevant. You want to get 25 or 30 ticks on the E-mini here. You've got yourself a huge successful trade. I'm not going to take a counter trend candle and not get stopped out. I could take the roll back to the downside, but I have to be very careful because as price moves off the 50, the market starts to get oversold. And I don't want to take a trade in an oversold environment. Very careful about that. Here's another trade to the long side. Now here's this trade on the short, no dot confirmation, no quant verification, no trade. We're not going to counter trend trade here. Here's your trade, right off the 50 long. You've got the middle quant, which is mandatory. The upper and lower would have been better, but you don't need them. You've got the 3 line, you've got your dot, and up you go. This is not a trade. There's no 3 line. Here is your trade. It's a small trade, but on the E-mini, our first target's a point, and this gets us a point. But you can also notice it's lifted off the 50. The best trades are these trades right off the 50 or where the wick comes into the 50. Now, the wonderful thing about Uni-Renko is they do create wicks. So I'm not going to go through it in this webinar because it's too advanced, but we can trade dual wicks. We can trade bull patterns and bear patterns, bullish patterns and bearish patterns off of those wicks to get slightly more complex entries. Renko bricks are a disaster. As long as you create that wick, it is extremely advantageous. Here's another trade, and on 4 contracts, this is a $3,800 60 trade. Again, the full move is irrelevant. This on one entry to the first reversal candle is a big move. And that's all we want. And I didn't create this trade. This is a real trade. And you can see all these oversold signals, Everyone's looking to counter trend trade. Finally, somebody does. What happens? The 3 line is yellow and they get run right over. You are not ever going to be in that again. Now, here's your long trade. This is a little more dangerous because it's lifted off the 50, and I like the trades real tight to the 50. But up you go. I've signed up for Carbon. I have 2 accounts, and one keeps coming up. Here's your short oscillator signal, and you've got the quant. You've got those correlative markets. That's the Dow, the Nasdaq, and the Russell. We don't have the dots, and you have the 3 line, but I'm not counter trend trading. So that's your only trade, up. And here's the E-mini. This is a perfect trade. Short, short, short. Just look at the color of the candle halo. Don't look at the 3 line. And look at the dots. And I'm just going to skip these because this is just getting redundant. Now, before I even show you the offer, let me show you the charts. I mean, it's really easy to show you stylized JPEGs. Everybody can do it. Let's take a look at the DAX. Now, my charts are locked. Oh, that's why I got this signal here that I'm supposed to rotate my contracts. But we're staying with the back month for today and tomorrow. Now, let me just get off all the drawing stuff because every time I give a lecture, after every trading session. Now, there's one other indicator that I didn't mention, as if we didn't need enough. But let me tell you, this is the most powerful indicator that we have. Now, there's a mathematical equation that describes the nonlinearity of independent variables. This is the most powerful independent variable we have. This is the multi-timeframe alignment of the market we're trading. We want the DAX to be aligned on multiple time frames in the same direction. That lights up every other assessment we do. I'm telling you, I'm not going to go through the three different powers of the three different downtrends, but you can see we have this lighter pink, we have this darker pink, and then we have the bisque color, which is another downtrend color. Then for up, we have the dark green, we have the blue, and we have the cyan. Now, if you trade without background bias, every other independent indicator we have is much less powerful, because we've defined mathematically and via the use of 2 years of market replay data that when you don't have a multi-time frame alignment and trend on the market you're trading, everything else doesn't become quite so important. So the reason I was going back is let's take a look at the DAX. Now, I used to get up at 6 o'clock in the morning to trade the DAX with our traders until I started falling asleep in front of the computer. And then I just got too sleepy. I'm a single dad with a 17-year-old and I can't do it. So at 9:30, the DAX rocks. Now, we're not going to touch anything here because there's no background bias. I don't care what signals I get with the dots. I don't care what I get with the quants. I don't care about the 3 line. I am only trading a signal when I get a multi-time frame alignment of the market that I'm trading. Then I'm looking. And I'm looking for a long trade right here. And here's my trade. See the 3 line? And up. Now the DAX is $12 and 12.5 euros a tick. So you get a 6-tick trade. We trade 3 contracts. You make 150 euros. That's $210. Now this is a revolutions indicator signal. I didn't talk about it. It does an assessment of about 80% of the variables that you require to take a trade. It's a smart entry, and you're in and up. Now you're only looking for a long trade. You can't take that here. You have a red quant, and there are going to be some trades you can't take. And here's your entry, right here. Now you don't have the 3 line, but here's the problem with fractal indicators. They change when you close and open your platform. It's not a hedge, and we don't repaint. But if you close and open, Ninja via the use of its platform is going to push everything a candle or 2 to the right. As long as you're live and the platform's open, everything stays. No color ever changes. So this is going to be a long trade. Trust me. And it's a big trade. There's another trade. Now, if you're trading at 3 o'clock in the morning, you're done right here. You're up about 600 or 700 euros, which you multiply by 1.15, and it's going to take you way up. Now you're up 1,000 euros, just taking conservative signals. Now here you have no quants, so I take this back, no trade. Now here, I'm not looking for anything. Now we're back in business. I'm looking for a long trade, only I have no entry. I have no quants. Right here, I have that middle. That's the one I want. There's my oscillator signal, and there I'm in. Here I have no oscillator signal for 3. There's my perfect entry. Triple quants, my revolution signal, dual dots, and up. Now we haven't found a loser yet on a chart. This is just today. And look at that trade. Remember I said you would like an oscillator signal, but you do not need one. You see how this candle was surrounded in blue? It's telling you, heads up, this market is likely to turn, and when it turns, you're in. And that's a 350 euro trade on the way we have our automatic trade management strategy. So if you stayed in it longer, you could have made 500 or 600 euros. That's all it is for us. Now it's 4 o'clock in the morning and you're done. So we're going to keep looking, even though, and I want to move to another instrument very soon. See, no background bias, and look how the market moves. Prices in chop. When you don't have alignment of your 2 higher time frames, forget about it. Don't trade. Now we've got an alignment. This is a weak alignment though. Now we have nothing. Now we have no trade here. And this is a great trade, I have to tell you. This wick that shoots back to the 50 right here with dual dots with the 3 line and all 3 quant lines, red, red, red. But I wouldn't take it because I don't have any background bias. And I'm not trading this clear area. Too many great trades, and there is your trade. It's another few hundred euros in your pocket. Now look at this long trade. Look at the 3 line. It's yellow. Look at the quant line. It's red. There's no way you're going to take this trade and chop and get stopped out. Look at the dot. It's red. This is what I mean by the power of this analysis. And you need everything in your favor. When you get the oscillator signal long, the 3 lines in the wrong direction, the dots are in the wrong direction, the quants are in the wrong direction, somebody else on a Uni-Renko or Renko is going to take this long and get blown up. Now, this is a great trade short, but I'm not taking it because it's just my style. It's a terrific entry, but I don't have any background bias. And I want it. I'm like a baby. I want it. And here I have a green quant. I'm not taking it. But on this wick right here, you could take this trade short. Now, I honest to God, we have not found a loser. Here's a down signal with a blue 3 line. So let's get out of the DAX. If we would have found a loser, we would have. Now, you're going to get losers. But if you stay conservative, they're few and far between. Let's go to the NASDAQ. And then I'm going to show you the offer. And if you want to see other markets, I'll be happy to show them to you. Now, this is a trade I missed this morning. I didn't have that middle quant, but I should have taken this trade long. It's right off the open. That's that purple dotted line. And this trade did not have the quants. I couldn't take it. This trade didn't have the quants. The E-mini and the Russell were not moving with the NQ. Finally, I've got them right here. I've got the revolutions indicator, the oscillator, the dot confirmation, and that's a big move. This is the 4 Uni-Renko. So I'll just give you an idea of how far that is. This is a very big move. Maximum, this is 17.25 points on that move with a very low risk entry. Now, I'm not going to trade in here. Forget it. No background, let it go. No background here. Forget it. There's your trade. Short. It's a nice trade. See, no background bias, and look what happens. The market just goes into chop. And this is a potential short trade you don't take. Potential short trade you don't take. You're going to give up some winners, but man, you are going to avoid the losers. Background bias comes back, and down you go. So I can go on and on and on. There's an additional line here that I just want to describe to you very quickly. As if we didn't need enough, I'm going to tell you something that this is what we also do. This line is looking at the cash. What this is looking at and is something really different. This is something that's done on no platform you will ever see. And again, it's to try to keep us from taking a loser. This line is looking at the cash markets. Why not look at the cash markets to give us a direction of how to trade the futures markets? So it's looking at the ratio of up to down volume, and I said ratio here, and the ratio on the cash NASDAQ Now, I'm scared of throwing too much at you, of up to down ticks. Stocks up on up volume and down volume, and stocks up ticking to down ticking. And it creates the assessment in one line. Right here. So this is telling us what the cash markets are doing. So not only are we looking at multiple futures markets on multiple time frames, as well as multiple time frames of our own trading chart, we're looking at the cash markets. Now, we want to trade stocks. This is great for the Qs. It's great for the SPY. It's great for we have one for the Dow. We have one for the Russell. But it's also excellent for trading futures. Now, the line is not mandatory, and it requires a dual data feed. You're going to have to get a kinetic data feed, and it's going to cost you, I want you to know up front, it's going to cost you $60 a month for that line if you want it. Now, sometimes, actually, I don't know of an independent broker who will give you these metrics for free. So let me go back and I'll answer questions, and I'll give you the offer. But it's a very complex program that is intuitively, it's very simple to trade. You wait for background bias, you wait for an oscillator entry. I trade it every morning, and it is not hard. And let me just bring up this slide and bring it over. And let me just scroll down, and I'll show you the offer. So you see, we've done a lot of work on it, and it's called optimization, and we're never done with it. If we can find anything that's better, we're going to do it and use it. Now, right now it's $29.99. We're going to give it to you for $13.99. This is a lifetime license, and the one thing that we do, which comes back to bite us a lot, is we give you all add-ons and all upgrades. Like that last line that I showed you, that cash metric line, everybody who owns the software got that for nothing. And as we add more stuff on, you're going to get it for nothing. Right now we're on crude, the E-mini, the Dow, the NASDAQ, gold, the DAX, bonds, and notes. Very shortly, we're going to be on all the currencies and the Forex. Already, you can trade stocks. You just have to tell me the stock so I can give you the Uni-Renko setting that you want. We have the dots and we have the quants. So you can pretty much trade almost everything you like. If you're a Forex trader, you're going to have to wait about maybe 10 days before we go live on the Forex, but we're real close to getting that market. But you're going to get it as a free add-on. So if you wanted the first 5, you're going to get 2 months in the trading room with me. And that is really going to accelerate your learning curve. Because after the trading is over, I trade with Chart Trader Up. Every target and stop is displayed. We have incredible transparency. This is not a BS room where we call the trades in retrospect, or we don't project targets and stops. If we have a bad day, it shows. You see every trade. And at the end of the session, I spend probably 45 minutes to an hour going over all the markets. Not just the ones we trade, but everything, just for educational purposes. And remember, there are other people in the room who are trading other markets. You get a 10 module weekly educational training session, and you get access to 450 videos for learning. So I believe you're going to make money almost every time, almost every day. I had a bonus quiz here, but that's ridiculous. Now, Let me see if there are any questions. Okay, hang on, because there are some. Caesar, Renko has no wick. It's just a brick. Uni-Renko forms a wick. And the size of the wick is determined by the configuration of the Uni-Renko. Now, we give you the Uni-Renko candle. Our Uni-Renko candle is better than the standard Uni-Renko candle. There's a thing called a shadow formation. And in some Uni-Renko bars, they will fill in spaces where there's really no volume and no price, simply to create the full candle. Ours don't do that. So they project an accurate price. So it's an accurate tracing, and it's hard to get rid of that shadow formation. That's the difference between Uni-Renko and Renko. You get a configurable wick, and that wick gives you a lot of good information. Do you use close of bar? Yes, John. We look at the bar close on the higher time frames. That's correct. You can't get a delta analysis until the bar closes. You don't know what that delta is going to be. You also cannot determine where the stochastic is going to be until the bar closes. So on the higher time frames, everything is configured on a bar close basis. But on the time frame we trade, everything is assessed intra-candle. We use stop limit orders, John. We buy an up close. When we want to take a long trade, we're in one tick above the close of the candle. That's a buy stop limit order or a buy stop order. Either one works the same. The gold dot line, blue dot line. Okay, Steve, I know what you're talking about, and I'll show you real quickly. The gold line is the volume weighted average price. That's the VWAP. And that's like a moving average that's based on volume. That's the gold line. The purple line, if I can find it here, that's the open of the session. This line is yesterday's close, and this red and this blue are pivots. That's all that we display on the chart, those three lines. And they really help us. Trading into a pivot is real dangerous. And I'm not going to go into our pivot indicator, but it's really quite powerful. And our pivot sensitivity is set so that we only get relevant pivots, not small, unimportant pivots, but the bigger pivots that matter. Those are all those lines, John. It's on NinjaTrader only right now, John. But if you swing trade, or even if you day trade, you can set up Ninja on a demo data feed, or actually your platform can power Ninja. If you're on TradeStation will power, I don't think TradeStation will, but Thinkorswim will, because I have TOS and it will power Ninja with live data. Almost every platform will do it. So you can download a demo. Let me tell you one more thing. We do all of the tech. So Sergio has a master's degree in tech. He'll set the whole thing up for you, and you can use your own platform to power it. And you can take the entries right off of your own platform. The only thing that's going to cost you, if you want that one line, it'll cost you $60 a month to Kinetic. You don't need that line absolutely to trade. I think it helps, but it helps you more if you trade the Qs, the SPY, or stocks. So you're not stuck since you can download Ninja for free and power it with your own platform. Exit, that's a great question. Is that Lobster? Oh, that's a great name, Lobster. I really like, that's one of the best screen names I've ever seen. It's real simple. What we do is we have an ATM, and I'll just show you what it is on the NQ. It's automatic. It's programmed in. So when you take a trade, you're in. The stop on the trade is automatically 25 ticks. and it trails the trade. If the trade goes up a tick, the stop goes up a tick. Our first target is 20 ticks, and our second target is 30 ticks. Now I trade 3 contracts, so we have the potential to make 90 ticks on the trade, and the most we can lose is 75 ticks. It's all pre-programmed in. Now, if you want a more conservative automatic trade management strategy, you can take your first target at 15. It's all up to you. And the 25 ticks is based on the size of the Uni-Renko candle. So we let the ATM take over and manage the trade for us. If we try to do it based on our gut or based on our human emotion, I always wind up closing the trade too soon. And 90% of the time, I cut off the profit because I get nervous. The trade starts to come back. I intercede. I close the trade, and then it goes through all our targets, and we make more money than I make on the trade. You just let it go, and we will program that in for you if you like. If you want to put in a different trade management strategy, you can also do that as well. Sure, Praveen. And by the way, Lobster, I love your name. Okay, Caesar, for the dots, it's just the NASDAQ and the Russell. I'm sorry, on the E-mini, it's the E-mini and the NASDAQ. But down here is where all the other markets are correlated on these 3 lines. And these 3 lines. Obviously, there's a different correlative markets on the DAX than they are on the NASDAQ, and they're created differently. I mean, the code that goes into creating these quant lines are very different than the dots. That's why you can have the dots without the quants. And if you look, I'll show you like right here, you have these green dots. You're moving in the same direction as the Russell and the same direction as the E-mini, but you have no quants because it's a separate assessment. So every single market that does correlate at 0.7 or greater, 70% of the time is in this assessment. Okay, also want to know in the live trading room, is the same system Praveen, this is exactly what I use in the live trading room. These are my live trading charts. This is my NQ chart, and this is my DAX chart. This is what I use in the live trading room. I don't add anything, and I don't subtract anything. This is my system. Today, Steve, let me find him. I took a couple of losers today. Today was not my great day for trading, and but I'm going to show them to you. I got a lot of winners, but we've had 5 really, really profitable days in a row, and sometimes you just get a little heady. And today I got a little heady. Like we were done on Tuesday in 7 minutes. We were done on Monday in 9 minutes. And today, I put us into a little bit of trouble, and I'm trying to look for the first trade I took. I'm gonna look on the DAX. Now, the first trade I took was right here. It was a winner. But then I got myself into trouble, and let me find out where it was. I didn't take any of these things because they were overbought. I didn't take this because it didn't touch. I want that wick to touch the 50. Where did I get into trouble? Hold on a minute. I'll find it. There was one area here that I wound up taking 2 losers back to back, which is really rare. You can see this is a winner. This is a winner. I mean, just one winner after the other. That's a winner. That's not tradable. But there was something I did, and I swear to God, I can't find it. I'm not trying to hide it from you. And I want you to know, I don't make money every day. And when I don't, it's usually because of me. Oh, here it is. I took this trade long on the second candle, and that was a disastrous trade. Now the dots were different live. And then I tried to take this trade long. Now there was no background bias. It was a gigantic violation of my rules. And when I violate my own rules, I take losers. So I took that loser and that loser. And then I'll show you one other loser. You want me to be honest, I'm going to do it. And I'll show you one other trade that I took that gave me a loser. And I had 9 winners today. And usually I want to close with 2 or 3 trades. But today I just couldn't do it. And let me find out where that trade was. Somebody smacked the DAX down about 25 points in a matter of 2 or 3 seconds. And I have to find out where it was. It was right here. Now I took this trade, it hit our first target. First of all, we got slippage on the trade. So we did make some money. And then what happened was, this, if you look at the time on this move down, this is 59 seconds, 59 seconds, 59 seconds, 59 seconds, 59 seconds. These are all taking place in less than a second. And so it ran through the stop so much, we got huge slippage on the move, and it wound up giving us a negative trade. So that was the problem. On the NASDAQ, we did really good. I'll find you the NASDAQ trades. I should have left the markings up, but I take them off because I have so much stuff on the charts after I do it in the morning, that I missed this trade, which was a mistake. That was not tradable. That was not tradable. I missed this trade too because I'm looking at the DAX. And I'm trying to, this was my first trade right here. And I took it without background bias. Another big violation. I will never take that again. I took it because the cash internal market was heading down. And I got a nice winner. But after I took it, I said, I'm never doing that again. Then I'm trying to see, that was my next trade. And I got caught here, short, and it didn't go. And I violated another rule. I traded into a pivot. It bounced right off the pivot. Every time I took a loser, it was because of something I did. This trade, I don't think I could have taken because of the quants. And let me just keep going here. There was one more really nice winner we took on the NQ, and let me find it. I can't find it. We had one other. That was the day. I mean, I caused all my own trouble. I traded without background bias, which we should never do, and I haven't done in a week. And I traded into a pivot, which we should never do. I mean, that's about adhering to the rules and trading with specificity. So that's human error. And that's something that you really have to be careful of. And honestly, I was just very heady because, I mean, I don't think I'd taken a loser in almost 5 days. Every trading day we were out in just a couple of minutes. It's available for both Ninja 7 and 8, Robert. Yes. Okay, Lobster. Okay, well, Renko bars are correct. This is completely different. Uni-Renko are different, Lobster. As they form, remember all of that, all of the, I wish the market was rolling here. You would see that this is going to move, and you're going to see everything. Now that's the range maker. This tells you exactly where this Uni-Renko is going to close to the upside, where it's going to close to the downside. So if we're good, now we're set up here for a potential long trade. The trade would be at 69.50, one tick above the close of the bar to the upside. This moves differently. Uni-Renko and Renko are completely different. And I'll show you the configuration. I don't want to confuse anyone with this. This is a 10-4-20, which means if you add 20 plus 4, a reversal candle is 25 ticks, which is why you reverse on the 25th tick, which is why our stop's 24. And the open offset is 10. And that means that each candle body is going to be on a trade like this, when you don't have a wick, is going to be 14 ticks. But you see all the move, everything inside. That's why Uni-Renko are so much better than Renko. Yes, Praveen, you get 10 educational tutorials, you get 450 videos, and you're going to be in the room with me for 2 months. So I trust me. You know, you should be on sim for a week to 10 days, and you'll know the system as well as I do. And I mean, it's ingratiating, but I have many traders in the room that are better than me. I mean, they make $1,000 a day, no kidding. Guys who have been with me 2 and 3 years, but you get all the information you need, and then some. It doesn't work on TOS or eSignal Lobster, but TOS and eSignal will power this platform. So if you want to swing trade, if you want to day trade futures on those platforms, you can use the data feed from TOS or eSignal. I mean, I have TOS, and one of the things I do is I have a big options portfolio that I have quite a few subscribers. And today we took out our first target on Salesforce.com at 60% up. We just got into Amazon, into an Amazon spread today. We have about 14 open positions. I take these all off of my software on a much higher Uni-Renko time frame, a much bigger Uni-Renko bar. So you can use that to power this platform. Steve, the pivots are simply from major swing to major swing. And what makes these pivots really critical, and I'll show you how important they are and why they shouldn't be challenged, and why doing it today was an enormous mistake. Price came right down here and turned. Price came right down here and turned again. Now, every time a pivot's hit, it tends to reverse. I mean, it gets weaker. Now, unlike most pivot indicators, which are lazy, and I hate to go into this, according to the Japanese rice traders, a pivot is created off a candle body, not off a wick. But you're going to be told the wick, because the wick is easy. I mean, it's real easy to code a wick because that's just the low price. It's a lot tougher for the code of the pivot to know that it's actually the candle body open. That's the key. This is where the buyers turn the market. The fact that the sellers tried to push a wick down here and failed, this is the important area. The other thing is really important about a pivot is just, again, according to Japanese candlestick dogma, it's only broken when 2/3 of the candle body closes below it. You see how you got a couple of ticks through? 99% of the pivots will stop tracing because price breached it. But that does not take these buyers out. You need to have a 2/3 candle body breach, and that's what our pivot does. So if you look here, price comes up and turns right up here, and I don't know if it ever approaches it again. Let me find an actual pivot break. Right here. See, the pivot stops tracing on this candle. because this is the one that breaks this candle by 2/3. So it's a very, very accurate assessment, and that's the way pivots should really work. We've had a lot of people approach us to buy our pivot indicator. We won't give it out because this is hard to code. But they're very, very accurate and important, and you should be very careful in trading into them. And if you want to trade with specificity, be careful with them. Now, a small swing pivot like this, I would be likely to trade into. But a big pivot like that, you have to do two things. One, see how many times it's been hit before. If it's been hit 2 or 3 times before, maybe it's ready to break. But you also want to see the size. And you can see it's gigantic. So far, it's never been broken. This pivot, right? All these buyers are sitting here waiting. And you have to be very careful with that pivot when price eventually comes down to it, because they may very well turn price. And I did that today twice, and I just threw money away. And it was really, really exasperating. I wanted to throw my microphone at the screen. Thank you, Steve. Thank you, John. Thank you, Praveen. Robert, you can have it for 7 and 8 if you want it, but normally people get configured for 7 or 8, but you can have both 7 and 8 if you like. I mean, we have them configured for both, and if you buy, Sergio will configure you for both. It isn't a problem. We'll do both for you. Yeah, you can, Robert. You really can. You're the first person to ever ask us that, but we have so many people that were on 7, and we just released 8 about 2 weeks ago, that now we upgraded to 8, that if you want 7 and 8, we'll do it for you. It's not a problem. Robert, can you be programmed to take all trades on signal and then stop once the daily price? You can't be. You can't be programmed to do that, Robert. Just trade with me. And I'm telling you, when I hit between $400 and $500 in a day, now that's on 3 contracts, I'm going to stop. Now, there's some days where we could have made 1,000. And there are other days where if we would have traded on, we would have given it back. That's our profit target. Our goal is 1,000 a week. But if we can hit 400 to 500, and we can, we need 2 winners to make it. And remember, if we make a full target on the DAX, 350 euros, that's $410. 1 full winner on the DAX, and we're done. So just stand aside. I'm going to stop trading. What I do is I let the charts project, because a lot of traders want to still stay. They want to still trade, but I'm not going to do it because I think it's bad money management. We are working on an auto trader, Praveen, and we are very close to releasing it. So when we do, you will know about it. We're really close, maybe a week and a half to 10 days, because these signals are real reliable, and we're going to have an auto trader take these for us. So you're right on. You're thinking right along what we are. Yes, Robert. Just send us an email and we'll give you all the details. It is. Yes, the program plots everything, Gene. The program plots the pivots. It plots everything. This is what you're going to get. What you see that I'm projecting is exactly what you're going to get. This is the full program. Now I'll show you right back here really quickly. I have the E-mini hidden. Here's my E-mini today. Not much. Now here's your trade right here. Boing. Now you don't have that intermediate. Well, that's at 6 o'clock in the morning. Here's the open. At 9:30, you just don't have much today on the. See all this clear background bias? Don't trade it. Nothing on the E-mini today. And I'll show you one other market. It's on a different screen. This is a terrific market if you want a swing trade. It's bonds. When you get a trade set up, you're likely to be in this trade for either all day or for a day and a half. And like right here is a setup short. Now, bonds are $31.25 a tick. And right here is a short trade. Now, this is a quick trade actually. And you're going to make 1 ton of, this is what the auto trader is going to do for us. That's 11 ticks at 31.25 a tick. Now you're going to get in, you're not going to get all 11, but if you can get 8 or 9, you're cooking here. So we're looking to set this up. Here's another short trade right off the VWAP. So you have dual dot confirmation. As long as you're trading off resistance to the downside, you got that wick going through. Got dual dot confirmation and triple quants, and down you go. You don't have to go very far to make a lot of money on bonds. And our bond chart is great. So is our note chart. I don't happen to have the notes up. I have so many charts up that it already takes me 7 minutes to start my Ninja because it's got to load a whole mess of charts. But you get all the markets. And as we continue to add markets, the 6E, we're adding the 6E, the 6J, the 6C, the whole Forex suite, you're going to get those all. Okay, I got you, Robert. Sure, Steve. What else is up? Listen, what's upcoming, Vincent, is the auto trader, the additional markets that we're trading, and what we're going to do very shortly, and we're working on almost. I got one guy who is a master's degree in programming, and the guy's about ready to have all his hair fall out. I have so many projects for him. He's basically having a nervous breakdown. At one point, 5 years ago, we first started, I figured we'd run out of things for him to do. Now, I feel like I need 5 more of them. We're going to make this revolutions indicator exactly like an auto trader's indicator. We're going to create it so that every independent variable we require is necessary in order to get this to fire along. Right now, it's about 80%, so you have to watch it. It still gives you usually great entries, but we're going to make it so that it's almost an automatic entry. You're going to have to press your mouse, but that's what we're looking to do as well. And we want to make it as easy as possible for you to make money and to avoid losers as easy as possible. That's the key. All you need are 2 trades a day to make over $500. In a brokerage account, Praveen, if you're going to trade 3 contracts on the DAX is $2,500 a contract. That's expensive. The NASDAQ is $400 or $500 a contract. So it all depends upon how many contracts. I trade 3, so you're going to need obviously over $7,500 to trade 3 on the DAX. If you just want to trade the NQ, and a lot of people do, you're only going to need $1,500 plus. Obviously, you need some leeway. But if you have $10,000, you can trade 3 DAX. And let me tell you, the DAX is very lucrative. It's a hidden jewel of a market that people I don't know why they ignore it. It moves great and it moves smoothly. It doesn't stutter you out usually. No, the lobster, the $13.99 is one time. I mean, we have a philosophy. Once you buy, we don't want any more money from you. The only thing you're going to pay for is after 2 months. If you want to stay in the room, and most people do, you're going to pay $149 for the room. That's it. If we get an upgrade, you get it. If you get an add-on, you get it. The platform is yours for life, and you're not going to pay us again. That's really the ones, Vincent. The the revolutions and the auto. And they're both, 80% done. It's not like we thought about them yesterday and we're ready to do them. They are on the fire. Yes, it is, Jeff. Yep, that's exactly correct. This indicator is called the revolutions indicator. It's right here. Here's all my indicators. It's called the RL Revo entry. And there's because it's a smart entry, there's one for every market. There is 90% of our indicators have to be configured for each market. See, this is an NQ dot, not just a dot. This is the quants have to be for the NASDAQ. That's why it's a complex system. We just don't have indicators you can just load onto every chart. Some of them you can. The oscillator is the same for all of them, but over half of them have to be configured for each individual market, which is why we still have upcoming the currencies. My pleasure, Praveen. Oh, sure, Gene, you can trade 24/7 if you like. There's no problem with that. I mean, anytime you like. I would recommend when there's good volume. But like I said, I was getting up at 6 o'clock in the morning to trade the DAX, and we were doing it really well. We were making money. I just couldn't keep my head up anymore because I still had to trade the futures room in the morning. And then, then my son comes home from school and I got to cook. I just couldn't do it. So we're back to our opening about 9:25. When we open, the DAX flies. We have so many opportunities to make money. It's pathetic. That's why I don't trade another market. Okay, well, listen, everyone, thanks so much for giving me your time. We'd love to have you come aboard. My goal, my commitment is to help you guys make money, which is why we put so much thought and effort into this program. We've eliminated what I think is all the nonsense that hurts other traders, that people throw at you and try to sell you. I trade this every morning. I'm in there, and it's for me, it is not, it's stressful for me. So I can't tell you that it isn't, but it is. And when I don't make money, I want to, I have a bad day all day. So I'm in the trenches with you all. And my goal is to make money easy and get out fast, eliminate our risk. Yeah, thank you, Steve. I like this system. I trade it and I would swear by it. I really do. We've got so much information in order to validate an entry. Your entries, if you're conservative, you wait for me to trade. One of the biggest problems is over trading. You wait to take a perfect entry. If 2 or 3 winners go by you that don't set up, don't care about them, forget about them, the trades will come, and when they come, you're on them, and they're going to blow through your targets, and you're going to close your platform with a smile. Have a great day, have a great evening, and hopefully I look forward to seeing you. Any questions, just send me an email or give us a call. We're all in the office. Take care and have a great night. And thank you so much for your time. Bye-bye all.